Euro dollar. So the euro continues to trade higher over the past several sessions, with the market now approaching some key internal range resistance, which comes in by the May high at 114.67. Overall, the downtrend remains intact here, and a break back above 114.67 would be required at a minimum to force a shift in the outlook. At this point, deeper setbacks are still favored, with a lower top sought out ahead of a fresh downside extension below recent lows at 110.87 and towards that July base at 108.09 further down. Sterling dollar. So cable rallies have stalled out for now at 153.83, and the downtrend remains intact here, with a lower top sought out in the 153.83 area ahead of the next downside extension back towards and eventually below recent support that comes in going back to May at 150.90, below which exposes 150, those psychological barriers further down. At this point, any rallies should continue to be very well capped ahead of 155, while ultimately only back above 156.59. That high that we saw going back to the 18th of September would compromise the bearish outlook. Dollar yen. So dollar yen continues to chop around. The market continues to be confined within a very small range here, a very tight range, though the contraction and volatility does warn of a breakout ahead. At this point, given the recovery high that we saw at 121.74 several days back, there's a lower top prospect there in favor of the fresh downside extension and bearish continuation back towards those extreme lows from August at 116.12. Only back above 121.74 would put the pressure back on the top side. Euro Swiss. So the Euro Swiss recovery outlook remains intact, with the market consolidating over the past several weeks, although a fresh upside is seen above recent highs at 110.50 and towards 112 further up. At this point, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has enjoyed a very impressive run over the past several days, out from recent multi-year lows, but the run should stall out soon as the market approaches resistance in the 74s. At this point, only a close back above 74.40 would compromise the outlook, while a bearish resumption is favored over the coming sessions back down towards those multi-year lows and below. Dollar CAD. So dollar CAD has seen an impressive pullback in recent trade off 11-year highs, though the market is now approaching some critical support that comes in at 128.60. Only a daily close below 128.60 would really compromise and delay the more intense bullish outlook, while a higher low is now sought out, or a base is now sought out in favor of a bullish resumption back towards that 134.57 11-year high. Kiwi dollar. So Kiwi has had an impressive run of late, with the market trading up towards some critical resistance just over 67. At this point, the market should be very well capped in the 67 area, with a lower top sought out, or another sort of high sought out over a medium-term basis in favor of a bearish resumption back down towards recent multi-year lows in the 61s. SPX 500. So the S&P 500 has enjoyed an impressive recovery rally over the past several sessions, though the market has come into some strong resistance over 2,000 in the 2020 area. At this point, look for the market to roll over yet again back down towards that recent support that we saw back in August at 1830, while only a daily close back above 2050 would really compromise the newly adopted bearish outlook for the S&P 500. Gold. So gold is looking increasingly constructive, with the market rallying over the past several sessions. A higher low now looks to be in place at 1100 above that multi-year low that we saw several days back at 1073. This will be confirmed on a break above some key resistance at 1170, which will open the door for a move back towards 1233 further up. At this point, only back below 1100 would compromise this newly adopted bullish outlook for the gold market.